Alright, hey, what's up everybody? Ted here with Bodies and Wicks. Wanted to, well, it's probably not going to be a quick video. I always go a lot over than I want to, but I wanted to show you something that I have been doing over the weekend, and that has been creating a trading plan. And if you don't have a trading plan, please create a trading plan. I don't know why it's taken me this long to create one. I always have it in my head, but I never put it on paper. Or put it in a document. That way I have it, ready to go at all times. That way I can just pick it up and know exactly what I'm doing, because it forces you to a set of rules, right? And once you're forced to a set of rules and you go outside those rules and you screw up, or you lose some money, you know that it's because you went outside your trading plan. And there may be some exceptions to where, you saw something that was like perfect at the right time, and then you wanted to take that, scalp trade or something like that. If you do something like that, make sure that also fits inside your trading plan. Make sure that everything is accounted for. So what I'll go ahead and do is I will go ahead and kind of show you what my trading plan kind of looks like. So we'll go ahead with the definitions. And I go through and just talk about, what's the least important, what's the most important. Least important, of course, being how much money you make. Most important being, it's just being actual, trying to get pips rather than how much money you're actually trying to make, of course. Modular thinking here, steady progress, instead of steady perfection. It looks like I missed something in here, so I decided to type that in, that I missed something. I'm still trying to figure that out, what I missed. Here's a little bit about pay yourself, basically. 2% growth can be good at the first profit, but if you try to hit your second profit, it can be up to as much as 20% growth, is what that's saying. $1 million futures insights. Pay attention to the futures. COT and commercial traders. Always take a look at what the commercial traders are doing, especially for trading Forex. In Bitcoin, you can do that as well. There's a COT for Bitcoin. Here I'm talking about the different news events, what you need to look for the specific currencies that you're going to be trading. I'll be doing the USD, Euro, GBP, and probably some crypto. And I'm still trying to figure out how all of this fits into crypto as well, because doing this with crypto is going to be a little bit different, because it's not going to shift as normally it would with, like, the commodities, like the CRB index. Oil and gold, how's that going to fit into crypto? What's the risk on, risk off scenarios that I just put on there? How is that related to to crypto? So I'm talking about time frame directions, top down analysis, making sure that you have your top down analysis done in a great order. Here's my trading plan. Here's the perfect trade, basically. Or no, that was trading, at the end of a specific time frame, telling myself I can make an exception. Here are the yields, 2-year, 5-year, 10-year yields. You want to take a look at those every day to see if there's any kind of SMT divergence. This is the CRB index that's scrolling across the screen. I usually want to compare that to the stock market. They usually work in tandem. Generally, the CRB moves a little bit ahead of it, so that's one thing to take notice. Weekly candles, what I'm saying here is, don't be wishy-washy about a weekly candle. If you have a bias about a weekly candle, stick with it unless you have a perfect reason to go against it. 4-hour candles, should be there for basically finding order blocks, to find the entries. and then make sure that you're marking off your key support and resistances in your order blocks and other things like that with different colors and different things, just like I do here in this that I call the perfect trade, which would have been the Ethereum trade not too long ago. Different tools that you're going to use, I put in the MACD, the RSI, things like that. Goals that you're going to have. I have daily goals, weekly goals, how many pips that you want to hit. And then here is your checklist for your determining your trading bias, right? There's a 13-step checklist for your trading bias. So that is part 1, right? And then I also found this thing right here called the pre-flight trading checklist. So it's kind of a cool document. It gives you a lot of different things within the document, especially like psychologically, how many pips you're going for, things like that. There's also this thing that I found. It is called basically a pivot pips chart. So you basically every day when you're trying to find the pivot, you can kind of gauge and measure, where this pivot was, how far you were into the buy zone, how far you were into the sell zone, if you reached it or not, things like that. You can kind of record on a day-to-day basis. There's also a risk management workbook that I found. So it kind of shows you different position trades. If you're a swing trader, if you're a day trader, if you're a scalper, how many trades of those you take, how much risk was taken, for those types of trades, things like that. And then also, of course, you always want to keep a trading journal. How much risk, how much your current capital is, what type of trade that you took, how much risk what it was, what lot size it was, things like that. So these are things I have neglected to do for quite some time, and now I am beginning to do them on a more so of a regular basis. If I'm going to be a successful trader, I have to do what the successful traders do, right? And that is be organized, completely be organized and stay with it. And I can't get out of line. I got to keep myself in line. So far, I've been lucky to catch the kinds of trades that I have. But then again, I have also, excuse me, I've also lost some money. Not doing what I'm supposed to be doing, which is keeping that trading plan. I've been an idiot, just trading for no stupid reason, just being like, oh, I bet I can do this, and putting in a buy whenever it should have been a sell. I look later, just because I'm looking at a little quick 5-minute chart, and I'm like, oh, I bet I can do a really quick scalp here, and I can probably get like 5 pips out of this. And I'll put in a buy, and not realizing over to the left on the 1-hour chart, there's a big order block that it's actually smacking into, and it drives it straight down. And I could hold on to that trade, but it probably wouldn't going to come back for another day or two. So instead of holding on to that, I'd take the small little loss that I have and then move on. So those are things that I have been trying to avoid, trying to make sure that I am being the best that I possibly can as far as my trading is concerned. But now let's go ahead and let's just get into the nitty-gritty of things. So what I wanted to do, I wanted to go over some crypto today, not too much of it, because I feel like I'm a little bit cryptoed out. And I basically have just been putting money in HODL accounts and not so much trading it, because the spreads have been getting so high now, because crypto is getting so high that it's almost impossible to it's not impossible to make money. It just takes a lot longer for you to close in on that spread. So you gotta kind of have the perfect trade, and then know you have the perfect trade and just hold on to it, right? So first, let's just go ahead and head on over. 1 second here. while I take a look at this and there we go. Sorry about that. I had to fix my own self on my next there we go. So here we go. So now we got ourselves at the this is the GBPUSD. Yeah, I know. I got a ton of lines on here I probably need to fix because this was from last week. I always like starting over fresh from the very beginning. And what I want to do right now is get rid of any kind of Fibonacci that is on here. And look at this right now. I'm at the 1 day. And where we are at considering it at the 1 day, right? So we here, right, over here, right, in this big ol' apparatus, I always like to call it the big old trading apparatus back from 2018. We had this big dip in February 2018 that came down and pushed back up. This would be your daily breaker, right? And then there's also a gap in between there, right? That's where this green box comes from. It's a gap in between that daily break, there and that daily breaker. So if we're going all the way over to where we are currently, we have almost filled the gap. We have not yet touched the daily breaker. We're still a little bit away from that, to be honest. The high here being 36863, and here being the breaker being 37113. It's at 117. Sorry. So we are still looking at about what? 71368, about 40 or so pips before we're actually going to touch that. It is just now opening the market. Right now it is 4 p.m. my time, which would be 5 o'clock New York time. So the market has just now opened. So what I wanted to say about the GBPUSD is that now that we have broken through this kind of initial resistance area, I'm expecting it to go higher at least until we hit this breaker, right? So we have now where it's opened from on this candle. If we want to spread this out a little bit. Where did we open at? We opened at 136461, right? And so that means we have about 60, 70 pips until we hit that breaker, I think, until we start moving backwards. The opening looks like it was probably about the same as where we closed last week. Yep, there wasn't much there of a difference. You can see a little bit of a drop down, but not too much. Anything, this was actually kind of one big bearish order block, except for this right here. I do see a little pump up. So it's already in that order block. So I'm thinking, it looks like GBP is already going to start pushing itself up. Even though everybody thought last week that it was a bear trap, I kept reading in all these, these forums and everything that the GU was a bear trap, and and even the dollar was like turning around and going up, and GU was just like, screw you, I'm gonna stay right here. Shows you the pound has actually kind of gotten a little bit stronger. What I want to do now is go to the day, right, and I want to mark off some daily highs. So we have broken the previous day's highs, because the last one was the last daily high. So let's just go ahead and mark this daily high, and let's just aim for that. I mean, it's already starting to go for it. Geez. GU has taken no time to take off. I'm going to try to break this daily high. Which, to be honest, if that happens, if we see within the first hour of opening, we see GU break this daily high and hit this breaker, I'm going to say we're going to start seeing a downward shift after that. But we could just seeing it close the gap and maybe just a little bit more. Now, as far as daily lows are concerned, because you know price always loves to get, I don't know what this is in here, but let's get rid of that. Price loves to aim for those daily lows as well, so let's go for that previous day low to see if it's going to aim for that. Here was those equal highs that I was talking about that it could get above. It definitely got above those. We can probably get rid of this day's high and this day's high. I actually want to focus on the previous 3 days, right? So here's day 1, day 2's daily high. We can just move that on up here, and then the day 3 daily high would be this guy way down here. Alright, daily lows, we can move this guy over here and then move this one up here. Right, so now we have the last 3 days highs and lows. We also have some other daily lows down here that could possibly be broken as far as liquidity is concerned, and I will leave those there. What I am going to do is get rid of some of this hogwash, I guess you could call it, that's in here, and get rid of this as well. So over here I have what this is. This is a little bit of a I wouldn't say a break, but I didn't mean to do that. That is a imbalance basically, and this is an order block that's in here, and I would need to actually pull that up and then get really in here to pull this over to the side. So here's an order block in here. Here is a imbalance. So if it ever got down to here, this would be the area I would expect it to bounce off of, which is around the 32315 area. Right, but we are nowhere near that. We are in the 3.6 range right now, so that would be about 500 pips it would have to drop before we got to those areas. So I'm going to get rid of some of this in here too. Looks like these were probably some order blocks and whatnot that I can probably get rid of now that are old. I'm leaving these dotted lines in here because these are the previous resistance areas. But now, if we were to think about this in a weekly perspective, where we expect it to go? I mean, since the dollar is just completely crashing, I mean, as you can see, especially over the holidays, over the holiday weekend, we saw nothing more but Bitcoin continuing to just outgrow itself. As you can see in the bottom left-hand corner, it's almost at 34,000. You know, I didn't think it was going to break 30,000. I thought it was going to be somewhere around 27, 28, and it was going to turn right back down. But then I caught an interesting video from somebody, and you know, they said that if Bitcoin was going to turn out to be what it's supposed to be, is you know, it spent enough time below its 20,000 mark, right? It's been enough time below its 20,000 mark. It should stay above the 20,000 mark if it's going to be what it's going to be. If everybody thinks is what it is, it should stay above the 20,000 mark. Now it's definitely stayed above that. It could get to 17.5, around maybe 16. I think that's where the low is, what people were talking about, the lowest it should get. But that being the case, people are fleeing currencies. People are fleeing fiat currencies, and they are going to cryptocurrencies. That being said, you can still make money off trading currencies. So the question is that since people are flocking to these, I just wonder how much action we're going to actually see off of, you know, these fiat currencies. You know, if everybody's fleeing off the dollar, especially the United States, and going to cryptocurrencies, we should see foreign currencies. You know, it should be like almost like a risk-off scenario. You know, to where their risk on scenario, I should say, to where the dollar is just a nothing and you should be putting your money in everything else. So that being said, I am looking at a daily view of GBPUSD right now, looking at its previous balance, right, and it has been fairly well balanced up until kind of recently. It did kind of come up, hit this high, pull back pretty far, came back up within a couple days, hit the other high, came down very, very lowly, and now it's going back up. And I think we're going to kind of see this kind of movement, continue until we get to the highs of that last night 2018 area. So that's what it's going to be reaching for. It's reaching for that liquidity, reaching for the liquidity of this area here. And I'll just go ahead and mark it off, and we shall use this as a bright blue, right? And let's go ahead and make sure that this reads early all-time high, but all-time high in recently. It's definitely not an all-time high, but it's currently, that's what it is. It's an all-time high since 2018. So, but there's a lot that can happen in between now and then, especially with, oops, didn't mean to do that. Especially with all, the breakers and the sell side order blocks and all those kind of things. So, now, what we can do is get down into the... Actually, what I want to do is look at the commitment to traders report for the British pound. So we'll go here. Right, most recent contract, January. Right, what I want to do is I personally want to go to options prices. I want to see if there's any open interest on specific areas and how much interest is in those areas. So we have call. Okay, we have a big volume of calls around the 3.8 and the 3.7 area, right? And these are January contracts. So they're saying by the end of January, we should definitely see the British pound get above 3.7 and 3.8. We have very little puts in those areas. We even got some 1.39s calls, 1.385 calls. We definitely have, it looks like a lot of people are calling for 1.38. That's the most that we're seeing out of the calls. So that would be areas I would be focusing on. If that's, especially if institutions are putting in their money, on these kind of things. That's where I would be looking for. And you got some people that are putting in the easy calls, the 1.35s, but they're putting in the high premiums for it. But then again, they're probably making it way much more than what their premium is called for, versus the people that are actually taking the risk who are only paying a small premium of $181. But look, that's how many people are thinking it's going to get above 1.38. So that's what's interesting to me. So 1.38, I would say, definitely is an area we should be taking a look at as far as where it would be going. And because if you ain't putting your money in the British pound, you don't think it's going to get above 1.38, you fooling yourself. Even though they've locked down Britain, they got to spend their money somehow, right? Somebody's got to get paid in there. Got to be like the Amazon people, right? Whatnot. Look at this. You can look now. You got the open interest even more coming up. here. So this is the people that have open contracts, right? The interest in open contracts is this purple line right here. So now down here is the COT report, as I was talking about, the commitment of traders. All right, let's see who's who. Your red is your commercial speculators, green your large, blue your people like you and me. So let's take a look at the red and let's see what's going on. They have shorted it recently. But that was back on 12/8 is when, well, they started shorting it back in mid-November up until recently. And it looks like they started adding longs again about mid-December. So they started shorting it here for some reason, which I guess it would make sense. If you want to short it here and then you end up here, you made money, right? You know, buyer maker, if you think about the way the market maker buy sell model is concerned, you know, people do like to, you know, I would definitely short there too, you know. Let me see if I can't get this to pull down a little bit, that way we can get these all on the same screen. Right, so right around here, right, is where they start shorting it. I would say right at the top of this is where they put in a lot of shorts, right? And then right in this area is where they definitely bottom out their shorts. So they're shorting, they're shorting, they're shorting, and then boom, it gets right here. So from here, all of this, they were shorting this area till it got right here. They probably exited all their trades here and then started longing, which is why you see the longs start to pick up and then boom, goes up. So they saw this happen. They knew that this was going to happen, and knew this was going to happen. Now that they are extremely short, my guess is that their longs are coming in, considering they have way more calls that are going to be trying to reach for the 1.38 than anything. So weekly candle green. Weekly candle green. That's what I'm calling. Weekly candle green for the GBPUSD. Let's look at this on a 4-hour perspective. Sorry. You know what? Maybe I should get rid of these. We actually know this is the area. If anything, maybe I should do is kind of draw a box. Daily highs. Looks like that was probably right there, right? And then this previous daily high was right here. Because that last day, yeah, you know, New Year's Eve, or you probably wouldn't expect much price movement, and it really didn't do much. You know, it kind of fell a little bit, then it kind of went back up, but whatever. And so now what are we looking for, basically? All right, what we're looking for is an area to where we think that the British pound would go to either balance out, right, the price action or the price of you know, the GU, and then buy, because we know it's going to buy, right? We all know it's going to buy. That's just a given. It's going to buy. Question is where. So it looks like you have your main order block, right? If you're counting these candles right here, you have 1, 2, 3, 4 down candles. That would be your main order block. If you go straight across, you do see that this candle right here has wicked it. So we do this, boom. That has wicked it. So it has came back, mitigated that order block, came on above. Now the question is it going to stay above this area? Or are we going to look at this and think it's going to come down even further into this area and possibly go up, right? So what I want to do here is I do want to put a Fibonacci at the very bottom of this, the very top of this, and see what we come up with. right? So if it were to come down underneath the 618 area, that would touch one of those last daily highs, right? Before it decided to move on. Question is GU actually going to pull back that much to do that, right? I am not 100% sure. So what I also want to do is let's head on over to a different chart. Not look at Dash. What I thought Dash was going to do was go down below here. Actually, it's in the 618 area, so it's at a decent time to buy. I think I said 88, right? When I do this, yeah, 88 probably a decent time to buy. Anyways, we're not looking at that. We are looking at the dollar. So, like I said, the dollar even pulled all the way back up, which you would assume would bring the pound down, but instead, the pound stayed up instead. So, because of that, there's a little bit of divergence between the pound, the dollar, and the euro, which means that there is actually more. What's the word I'm looking for? More room for the pound to actually fall a lot harder and a lot quicker, right? Because any kind of movement that is going to be, it could be any direction too. I mean, the dollar could start going this way, the pound could stay still, right? It's funny, I mean, if the dollar is falling, the dollar could stay, or the pound could stay still, and then when the dollar starts retracing back up, right, which would bring the pound down, the pound could actually just crash, right? It could just crash because there's that much of a divergence in between the two. That's what I would be looking for. I would be looking for the dollar to possibly start gaining ground, or at least falling a little bit. And if you see that the pound is really not moving, I would look for those whenever the dollar starts going back up. Anytime it does, that's when I would watch for the pound to just start falling almost rapidly out of the sky. Because I think that is what's going to happen. Because there is such a divergence compared to the euro. If we want to take a look, because we're going to take a look at the euro anyway, so we might as well take a look at the euro. Look at Ethereum. Ethereum broke $1,000. Are you kidding me? Did it really break $1,000? Let me look. $998. It got very, very close. Wow. It was just at $700 a couple days yesterday, wasn't it? Insane. Anyways, we are going to take a look at the euro. Which, if I can find, there we go. Forex. Euro USD. Geez, I need to get rid of all this stuff on here too, huh? Because I am on the 15-minute. Let's take a look at the daily. So this, I like to look at closely correlated pairs. GU and EU are both closely correlated. Now, here's the thing: is that it looks like EU has hit the top, right? It looks like of all of these order blocks and whatnot. So, okay, let's go to the left first and show you what I'm talking about. I drew all of these areas, right, from this, within this big box here, right, of the market maker model, right? So you have, you know, these weekly. Here's the weekly bearish order block. Here is a 4-hour bearish order block. Here is a daily bearish order block. I mean, we could just keep going with these, to be honest. And let's change the color, right, to gold, and this is going to be dashed, right? So, right. And then the next one is here. I want to change this one's thickness. And then these are the support and resistance. These need to be changed. Sorry, I'm trying to make sure that a lot of the stuff is in cohesion. This is what I was doing with my and I'm not for sure what that is. And I think that was supposed to be there, actually, yep. But this also needs to be put down to a little bit less thickness. There we go. That way I'm a little bit more in order with what I want. I want the smaller things to be done with the farther away, right? And then once you get closer, I want those the ones to be the little bit thicker ones. So I guess we could put a name to these, right? These would be a meaning that once that level is hit from the underside, it has the ability to bounce off of it, right? Not for sure what this line is here. I don't think it serves a purpose, so I'm going to get rid of it. So here we go, breaker or order block. I mean, at this point they could be order blocks, but considering we're only in the daily, they look like breakers, right? So order blocks, breakers, almost the same thing pretty much, especially when you're looking at it from a daily perspective. Now I also have the liquidity draws up here as well. So this is where price is trying to seek out, wants to get above these, right? Because these are where you're these are where your you know, people are starting to put their sell limits, right? So you get close to these, people are going to put their sell limits here because they think it's going to reverse. And what more than likely is going to happen is it will jump into these, pull back down, and then go back up through them, taking everybody out who put some kind of sell limit close to this area. You know, take them out. That's what it's going to want to do. But to get through that, it has to get through all this price action in these areas here. So let's get a little bit closer and see what's going on here. Now, weekly. What are we thinking for weekly for the euro? I am going to say it's green as well. Just because that last day that we had where the dollar did pull back, the euro is more in sync with the dollar than the pound is for some reason. I don't think we're going to see the dollar actually have some kind of epiphany and start making a run for it. I mean, there's a possibility. I mean, there are some equal highs here, right? Get rid of these. Like right through here. There's some equal highs, so it does have a liquidity draw up through here in this area, right? Not too much. But, and then here you do have a big old gap We have a big old gap right here. And not all gaps get filled, but about 95% of gaps get filled. I don't see why this one would be any different. So there could be a possibility that the dollar does actually go back up. In that case, the foreign currency goes back down. But I have seen stories of people cashing out their Bitcoin, right? People cashing out their Bitcoin and then, buying off their house with it. People cashing out their Bitcoin and, getting rid of their student loans. People cashing out their Bitcoin and just buying things with it, which is, honestly, it's kind of dumb, in my opinion, because right now you should be holding Bitcoin, but the reverse could be happening, right? So what I mean by the reverse could be happening is that since Bitcoin is going up, the people that are happy with that, the people that are, had invested in Bitcoin and just needed it to, pay off whatever they needed it to pay off, it has gotten to that point. They've paid off, they're out of their debts, they're happy, they can go back to their normal life. I saw some stories on Reddit about it. That could be affecting the dollar in a good way. That could be making the dollar turn around. So, but then again, we're printing the dollar so much right now. I think right now what it's going to depend on is it's going to depend on this stimulus bill. If the stimulus bill goes through, we're going to see a mad drop of the dollar, because we're just going to print so many dollars that it's going to make the dollar pretty much invaluable. Make it pretty much not worth anything. Not for sure what this is here, but I definitely want to get rid of that. And so the dollar hasn't even started trading yet because it is not yet 5 o'clock on my end. Should start to trade in about maybe in 15 minutes or so. Sometimes it trades at, whether it trades 6 or 7 New York time. I can't remember. But let's just say we look at this at a 4-hour perspective. Was that December 17th? That was December 17th. So we have seen the dollar reach down into the reach down into half of the of this here. So if we want to count this as the top, I actually don't want to count that as the top. I want to count this as the top, to be honest. There we go. This is the bottom. We could be right about at the middle of that. That being said, I've drawn out most of the areas to where we could be hitting, order blocks and whatnot. Probably could draw out a few more, right, to see if the price is going to bounce from these areas. There's one here. Here's one here. I don't know what this is. Let's get rid of it. Do want to get the lows, right? And actually mark these lows. So let's do low. Let's actually get this at a red color. There's one low, and then here is the second low. Not lower, louser. All right, so And then, so when price comes down here, I think it already did bounce off of this area here. I think I was calling it for it to hit 892, which would be this low here. If I'm not mistaken, we are around 89. Let's just see where we're at. I think it is around the 897. Oh, come on. There we go. It was pulled back up. It got down to 895, right? Got down to about 895, so that would make sense because your 2s, your 5s, your 8s, and your 0 levels are what you want to look for. As far as support and resistance are concerned, your big round numbers. That's what they look for. It has pulled up to around 899. All right, and it looks like we got a little bit something. Oh no, that's December 31st. That was just a little bit. So, waiting to see what happens today. I don't know why we have January 1st in here. But I think we're just gonna have to wait and see what happens with this gap, to be honest. But these stories of Bitcoin could do the opposite for the dollar, right? It could push the dollar up, but I don't think so. I think we're gonna see people taking their money that they get as the dollar, and now a lot of people are putting it in their own personal banks, right? Their own Bitcoin banks, their own Ethereum banks, right? They're starting to bank themselves now without having to use a bank. And it's awesome. It's a completely revolutionizing thing that we're going through right now. I honestly wish I would have put a lot more money in earlier, especially seeing at the price it is now. Especially seeing it, trying to, earlier this year I was watching it and it couldn't get past that $10,000 mark. And whenever it broke that 10,000 mark, I was like, cool, it broke the 10,000. I was like, probably layer on 12, 13 for a little bit. And it didn't even do that. It went up. It just, after 10,000, it just, boom, gone. Like, it was crazy. And I think people are starting to realize, that the Ponzi scheme of the Central Reserve banking system and what it does. Now, that being said, what kind of money can we make off of our dollars and our pounds and our euros? All right, so looking at this, I'm still, again, we still have the gap up here, right? We still have the liquidity draw up here. So there is definitely a possibility for the dollar to go up. And I think, honestly, that's what could surprise people at the very beginning of the week, especially since we're all thinking everything else is bullish. And we think the dollar to be right here, right now, and it should be dropping. It is underneath that low from December 17th, right? So December 17th was here. I think, yeah, that's what this is. Right, so we have that low from December 17th. It drops below that. It drops below that for a good day, right? Day and a half before it finally pulls back up. And I see nothing but, eventually this going to be dropping. I think immediately right out of the gate, probably going to see the dollar start to pull up. Right, we do have, I don't know what all this is. I probably need to zone in here and find out what I was doing. Let's get into the 1 hour look at this. Yeah, here we go. Equal highs equals liquidity draw. So we are not far from that. It looks like there could be a liquidity draw here. So it looks like as soon as it opens, we probably could see the dollar start to pull up, right? And possibly fill this gap from last week. And even then, you still have I still have what does it say? 3 touches at 90.369. So you had 1, 2, 3 touches at 90.369, but then you had this little arch that goes up into it, right? Takes out that liquidity that was just above that, but also hits this bearish breaker at the same time. So takes out liquidity, hits bearish breaker, doesn't get all the way up here, pulls back down. So what I'm going to say, but you do have this huge, I mean, this thing just shot right up right at 9 o'clock in the morning, which that, you know, it's about the expected time for it to do that. You know, there is a big gap through here in price that needs to be filled basically as well. Comes up, what do we do? It hits an order block here at the bottom of this, right? So it comes up into this order block, starts to fall, comes back up, starts to fall. I don't see it. I don't see it dwindling down, right? I see a gap up, is what I think. I think the dollar's going to gap up, and then I think it'll probably happen quickly. I think Monday will be our day that, you know, the dollar goes against us, or not against us, but the dollar kind of looks like it's going to have a comeback, right? Could be coming off, especially if we had news of stimulus, but we don't. But I think it could be anticipating that news or whatnot coming up. Maybe we'll know more. And then we'll see. With that being said, like I said, with the euro, right, so the euro, we have equal highs here. There's definitely a liquidity draw above this, right? Is it going to try to draw toward that automatically? No, not necessarily, because we also have equal lows down here. So if we have equal lows down here and the dollar could possibly go back up, we could see the euro drift down to here, right? To get down toward these lows. These lows I've been talking about. Like I said, I'd been thinking it's going to get below these, right, before it starts going back up again, right? Or, you know, you still have these kind of lingering, almost like pseudo equal lows, right, that are right through here, that it could try to drop down below those as well. But I think overall, I think what we probably could see is a major drop at the very beginning between GU and EU. But then after that, we're probably going to see a major recovery, and you know, it going the opposite way. Because not only is, you know, the Bitcoin thing good for the US dollar, you know, it passed, you know, 20,000 euros as well. So people that could have been investing in, you know, in Bitcoin and euros, you know, their stories could be similar. All of this stuff could be helping out, you know, the fiat currencies, as people are starting to pull themselves out of debt, as this, you know, this Bitcoin helps out people. So right now we are at a very interesting crossroads as to what is going on, and to what is happening. Actually, if I want to see if I can pull this up. First, what I want to do is, since we took a look at the, you know, the euro, let's go ahead and take a look at the others here. if it would let me do it. Oh, and don't forget, I want to take a look at gold. I want to take a look at gold. Don't let me forget gold. Euro FX. Right, options prices. Let's see what people are thinking about options prices for the euro. So, what do we have the most at? We have a call at 1.2300. All right, what I want to do is let's go to the euro. Oh, that's going to be easy to beat. So what I'm going to do is I'm just going to draw in a horizontal line here. Oops, I hit the hide button. I always do this. I always hit the hide button instead of horizontal line button every time. So, or some kind of other button. I just have fat fingers. Don't make fun of me, okay? Stop making fun of me. I always got picked on as a kid. Alright, so now we have that line right there. Style, we are going to make it we're just going to make it one big. Should we make it a solid line? Should we make it a dashed line and a fat dashed line? Let's make it a fat dashed line. And let's give it a different color. Let's give it a green color. And let's give it 1, 2, 3, 0, 0. All right. And let's get the text. How many calls were on that? That was definitely the most volume of all the calls, it looks like. 1433. So this is where most people are thinking it's going to get above. And it's also because the premium is kind of low too, right? Well, the premium, well, there's a call above 2400. I don't get that. Premium 950, the call above 2400. Well, evidently they're not thinking it's going to get above 2400. But it's definitely going to get above 2300. Some people are thinking, I mean, possibility it could get above 2400. Some people are saying 24.5. Let's go, instead of SEC, let's go side by side. Puts, calls. I want to see what the calls are. Strike price 121, of course. 2300. We got some people thinking 127 as well. So 12300 to 127. You got about 4,000, over 4,000 open interest on that. You definitely got some low-level gamblers here. Thinking 1.21, I don't know, 1.21, there's still 2,500 open interest calls, and the one, I guess they're just holding on to it, you know, hoping it gets higher. Maybe they made this call a while back, you know, I don't know. I just don't know. So anyways, not GU, EU, call price. My personal what's the word I'm looking for, schedule has changed, right? So I'll be starting at work at 6 a.m. starting next week. So I will be trading while I'm at work. So I won't be able to do videos, but I'll be able to do them as soon as I get home. Let me see if there's anything coming up on the Econoday calendar. It looks like kind of like the same stuff that we have seen. Yeah, John Williams. Okay, yeah. So this is kind of the same that we're seeing on 3-month bull auction, 6-month bull auction. All right. Well, anyways, I feel like I have talked long enough. Again, GBP. I think we're going to see a little bit of a rally back. Same with the euro. I think we're going to see a little bit of a rally back with the euro as well. Rally down, I should say. One of the main reasons, it looks like it did gap up. So we should see it fall and close that gap possibly. Looks like it may have already tried to close the gap. But we do have, this is the thing about the euro, we have 2 daily lows right next to each other. And then we have another 2 daily lows right next to each other. These are the kind of things that kind of scare me. Because it always likes to go for and tries to take out daily lows. So I wouldn't be surprised, especially with people thinking that it could get down to 1.18, right? By the end of January. We could see some fascinating movement in the euro. But that being said, the liquidity is all north, right? The liquidity is all north on the euro and the British pound. So there could be a couple slip and falls. I would be looking for setups, especially right at the London Open. Make sure you know your daily bias. I have a good checklist on going down the daily bias, and I will read it for you. First, study the US dollar index for general market direction. Refer to COT report. That's what I was talking about, the commercial traders report earlier. Consider commercial traders as smart money, thus try to position like trades. One thing we didn't do, actually, like I said, we're in the euro, but we didn't do the commercial traders report with the euro. So let's go ahead and do that. Like I said, with the GBP, it looks like everything was selling until this past week, and then people started buying, right? So I think they're going to continue buying going into this week, because like I said, it ended on a good note. So we could hit full chart, and let's see what the commercial. So commercial traders. Way back here, it looks like they were selling. Now they are buying. It looks like they sold right around mid-December. So let me pull this down. Right. And then sold around here. Which, does that make sense? This is right around December 7th. Yep. So they sold around there. And they probably started buying again. It fell. Now they're buying. And look at all this volume. All this volume, this open interest volume. Generally, if it drops off a lot, that tells me that there's going to be a buy. If it's up here, this tells me that it might be a sell. Let's see how much open interest there is. $1,800 or so. It looks like the 2,091 open interest. Insane. Okay. You gotta think a lot of that is people thinking it's gonna get below 1,800. And then some of that's people thinking it's just gonna get above, what was it, 1.27? So open interest accounts for both. But it looks like there is more people that are actually thinking the open interest is going to go higher than it is going to be lower, right? That's what that negative would be. So I think I think we're looking at buy scenarios here as well. We could see this little sell scenario, get below these equal lows, right, and then a buy after that. Don't think we're gonna hit 1.18. Very good possibility, but then again, banks are smarter than me, and who knows? Who knows what could happen? Anyways, I'm gonna get off of here. It's been an hour, and I've rambled on long enough. Thanks, guys, for watching so much. Always, if you can, go ahead and please hit that like button, hit that subscribe button. That would actually mean very, very much up to me. And you know, here I'll even give you some cool little graphics to even tell you. All right, if you could, please give me a like and please give me a subscribe. That would be tremendous. Other than that, I shall see you guys tomorrow or any other day this week, possibly. I'm not for sure. But keep track of yourselves, stay well, and remember to always wear your pants. Okay, thanks, guys. Bye. Any advice or information on this website is general advice only. It does not take into account your personal circumstances. Please do not trade or invest based solely on this information. By viewing any material or using the information within this site, you agree that it is general education material and you will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by Bodies and Wicks, its employees, directors, or fellow members. Futures, options, and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets, as well as Forex. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell, trade futures, spot Forex, CFDs, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in any material on this website. The past performance of any trading system or methodology is not necessarily indicative of future results.